Hello, everyone. How are you? If you can hear me, just raise your hand, make yourself familiar. Welcome to the webinar tonight. It's great to see you. We're going to get into it straight away, but what I'm going to do, I'm just going to share the screen again, and we are going to just go through the agenda for tonight. And there we go. I'm pretty sure you can see the screen. Just getting settled here, and I'll get Tim to jump on in a moment. But give me 1 second, just finding our feet. Here we go. All right. So welcome everybody. It's great that you're here tonight. What we're going to do, we're going to cover the boring type stuff around the Medicare levy surcharge and the lifetime health cover loading. We'll cover extras. We'll cover AIA Vitality. We'll have some polls, obviously. And if you want to ask a question, make sure you find the question and answer section and you write it in there, and everyone else can go in, read the other questions, and you can actually click like on it and it'll upvote the question. So at least the most popular questions we will vote for. And we can't do this webinar without AIA Health Insurance, and Tim is a wealth of knowledge, and I'll introduce him in a moment. And if you hang around towards the end, we've got an unbelievable offer from AIA, which I was a little bit surprised about how good it was. Would like to begin by acknowledging the darkinjung people, the traditional custodians of the land of which our studio sits, and pay respects to their elders past and present. We extend that respect to Aboriginal and Torres Strait Islander peoples who are joining us tonight. Now, what we always recommend is that you be encouraged tonight. I know it's a health insurance, and I know it's not the most sexy of things, but it is important. But just to get encouraged, look for one thing. Can you take away one thing and remember it for eternity and forevermore? And also upvote the questions. Now, I might get Tim to unveil himself, and we'll say hi to Tim. Hey, Tim. How are you?
Hey, Glenn. How are you?
Good. Thanks for joining us tonight.
Is my video frozen?
No. Oh, I can see you. You're moving around for me.
Oh, great. Okay, it's frozen for me then. You have me at a disadvantage. We're all good.
Oh, okay. Well, I'm sure it will unfreeze in due course. Now, hang on.
It's not my most flattering angle.
Isn't it? Well, can everyone raise their hands if you can see Tim? I've just... yeah, everyone can see you. I think it's
okay, great.
Yeah, must just be your end. Yeah, hundreds of people raising their hand. And, well, Tim, thanks for joining us tonight, and I hope it unfreezes. Did you want to jump out and jump back in? It's completely up to you.
Let me see what happens if I do. No, let's keep going. If you guys can see me, it's probably better. I can't see myself.
Yeah, no, that's okay. We will get there. Well, thanks for joining us, Tim, and thanks to AIA for supporting the webinar and helping us understand more. We got hundreds of questions in before the webinar, and I've kind of deciphered them as much as possible. So we will probably throw you under a bus a couple of times. So that's going to be fun. And what we're going to do... That was a joke, Tim.
Oh, it's all good. It's all good. It's so disconcerting when you can't see yourself.
Oh. Well, if you want to, I'm
good. We're all good.
No worries. If you need to stop the video and reset it, go for it. But what I'm going to do, I'm going to share the slideshow again, and I'm just going to take us through some of the basic boring things. And Tim, by all means, jump in and correct us. So you might, everybody at home, you may have heard of the Medicare levy surcharge, and this, it might look alarming, but don't let it. But basically, what the government want to do, they want to make you pay more tax effectively if you're a higher income earner, if you do not have private health insurance with a hospital cover element. So they want to get people out of the public health system if they're earning above $90,000. And that might not be everyone watching, but it's just interesting to know as your income grows, you've really got to look out for this. And anything basically there, Tim, that you need to add on?
No, I think it's a good summary. From memory, it got introduced in the mid-90s as a result of private health insurance take-up dropping a little bit in Australia down to the 30% level. We've got a really unique system in Australia, that we've got a really good public and private system, which is really unusual.
Yeah. And that's what I would say. Like, it is a hybrid system, and we'll get into that in further detail. But that's effectively one big lever that the government are pulling to say, hey, if you're earning over 90K or 180 as a family, you will pay more tax each year. And a basic example of that is, if you're earning 92 grand, excluding super, that's an extra $920 a year that you'll be paying. The normal Medicare levy is 2%. So there's just an example. Now, what we're going to do, we're still kind of warming up. It takes us a little bit to find our feet here. I'm going to launch a poll just so we can see where everyone is webinaring in from tonight. So you'll see the poll on the screen. We've got a couple of polls, and if something comes up throughout the night, we can run a quick poll if we need to know something. And there we have it. I'll just let it go for another 20 seconds or so. Everyone's answering. There's 70-80% of people that have answered the poll. And I'll end it in 5, 4, 3, 2, 1. End the poll, and I'll share the results. There we go. 46% of you are in Melbourne tonight. And we're really thinking of you tonight in your lockdown. 27% are in Sydney, 15% in Brisbane, and then we've got some people watching from overseas, from Darwin, from Adelaide, and also overseas in Hobart, and there's a few people in Canberra. So that's the poll function, everybody. So just get your head around it, because we'll do some more polls. We'll do some more polls throughout the night. But just 101, Medicare levy surcharge. The more you earn, the more the government want you to consider private health insurance. Now, this one's a little bit different. And what the government have basically done is they've said, if you don't get caught by the $90,000 as a minimum threshold, for every year that you're aged over 30 years old and you do not take up private hospital cover or private health insurance, you'll have to pay a loading on top of your premium that's extra, that goes up every year that you don't join. And you can see here, like, as extreme as it gets, if you wait until you're 50 years old, you could pay 40% more per year. So it's very important to note that the government, they really want people, if you're over 30 or earning more than 90 grand a year, to really consider private health insurance. Anything you'd want to add to that, Tim?
Really, this one's designed to really try and make sure younger people are participating in private health insurance. And I can say that because I'm old, but yeah, so this was really designed to make sure people weren't dropping out of the system when they fell off their parents' cover or whatever their circumstances were.
Yeah, and I guess the older that we get, the higher chance that we will need private, like a hospital treatment, perhaps.
Yeah, I think the reasons people claim for things change throughout your life. Not everyone's married and want to have kids at 20. So you might be using physio. You might just think the hospital covers a rainy day cover. As you get older, you probably need the hospital cover more than you need the ancillary cover. So it really is one of those products that changes with you as your life stages change.
Yeah. Now, I think we'll keep this dynamic and answer some questions they come in. And I'll say at the outset, if I don't know the answer, I'll ask Tim. If Tim doesn't know the answer, we'll get back to you at the end of the webinar via email or whatnot. But there's a question here, Tim. Kerry asks, do any companies ever waive or discount the lifetime health cover loading?
No, you can't waive or discount that. You have to apply it.
Yeah.
It's government mandated.
Right.
You can get waiting periods waived and things like that, but the lifetime health cover loading, is mandated by government.
Yeah, no worries. And one other question that popped up, which we'll probably get to more as we get into like the product details. Sean asks, the barefoot investor believes you should only get top tier hospital cover and never extras. Do you agree with the top tier only statement? So we'll just throw that out there, because one thing I would say is I don't think you can make blanket statements. We'll just leave that out because everyone's situation is different. But I might just leave that hanging there. So I think it's safe to say, in terms of the two government things, that the government really want you to get on private health insurance. Now,
well, and sorry, Glenn, just the only thing I'd add to that is it's sometimes useful to understand why these things are in place. As I mentioned a little bit earlier, you've got a really good public system, but you've actually got a really high quality private system as well. But the public system, if we had no private health insurance, the public system couldn't contain that level of procedures and operations and all that sort of stuff. So it's really important for our society that we've got a vibrant and good private system as well as a public system.
Yeah, totally. And I might just launch another poll just out of curiosity to see who's in the group tonight. And the question is, do you currently have private health insurance? And there's 4 things that you can answer. Yes, I'm happy with it. Yes, but I'm looking to review. No, but you're in the market. And no, I'm not sure if it's for me. So we'll just let that go a little bit. And I'll end that there. There's 90% of people that have completed that. So let's share the results. So yeah, so 43% of you are looking to review your existing cover. 22% are in the market. 20% are not sure if it's for you, and 15% are happy with it. And that's interesting, Tim, because we do have some questions, and I might even answer one right now that because 43% of people are actually looking to review. There's a question here: how do I switch from my current provider? Will any waiting periods be transferred across? So perhaps it's maybe worth stating what a waiting period is first and why they apply.
So you'll get waiting periods for things like pregnancy, things like that. So that and basically, and you've got some for pre-existing conditions, usually 12 months. The reason why you've got those waiting periods in place is you don't want people just taking out the cover and then claiming on it and then cancelling it 2 months later or a month later after their procedure. So it's really something that's in the system to protect the integrity of the system. Now, typically, if you're switching providers and you've already served a waiting period for something, then you will not need to reserve that waiting period with the new provider. And there's something in the background called a transfer certificate where the two funds get in touch with each other and actually do a comparison to make sure that you don't serve any waiting periods that you've already served again.
Right. So that's actually good, because if somebody has already got private health insurance, wants to review their cover, have some pregnancy associated covers and want to change, they won't be penalised.
Correct. But if you don't have pregnancy in your current cover and you're switching to cover that has pregnancy, then there'll be a 12-month wait on that.
Yes, perfect. There's a question here. Is there a minimum level of cover you need to have the Medicare levy surcharge waived? So can I just get ambulance cover and say, there you go, the government, I've paid my $300 a year and now I waive the surcharge?
No, it needs to be hospital cover, and the excess for a single needs to be less than $750 or less.
Right.
And the excess for a family is $1,500 or less.
Right. Okay. So realistically, you can't game the system. by getting an ambulance cover and saying, there you go, I'm with AIA Health Insurance now. Wave the
Yeah, correct. And if you're going to take it out, you might not need full cover. You may, depending on your circumstances, as you mentioned a little bit earlier. But it is worthwhile once you start doing the sums, particularly if you're in the higher tax bracket, that to see what your needs are and where you are at your stage of life. I know a lot of people that in their 20s that play sport that need good extras cover. Now, that doesn't count towards your Medicare levy surcharge because it's based on hospital, but you might need physio and other things as you play sport or whatever lifestyle you're leading.
Yes, definitely. And I'll say straight out of the gate that I'm very pro private health insurance because I've personally benefited from it, and I know other people that have had it. It just gives you so much more flexibility if you do need to get some treatment. And there's a question here, and I guess we can jump into it. How often should I review my cover?
Well, I think Choice says you should review it every year, but I don't think it needs to be my personal view. It doesn't need to be that prescriptive. I don't know about you. I work for a health insurer. I don't want to be reviewing my own personal health insurance every 12 months. But if things change in your life or you feel like it's getting too expensive or whatever else it might be, then that's probably your trigger to have a look at it. If you're planning a family, for example, that's usually a good trigger. If you're moving out of home, that's a good trigger because you may no longer be on your parents' policy. If you want to have a family and you want to go down the private hospital route, then you need to do a bit of planning to make sure you get the right cover. So it really does depend on your circumstances, where you are at in your life.
Yeah, and there's a. I think I was just looking at another question. There's a question here, and we will get to it. Can you please explain the benefits of taking out private cover for pregnancy? So I will flag that, and we'll talk about that a little bit later. I might actually now. How's your video going, Tim?
I think I can. I'm moving again. I look less like a zombie, so that's good.
Yeah. I'm loosening up. Are you settling in there, everyone?
Well, I hope you can. This is my office, and it's currently 427 degrees in here, so I might take my jacket off at some point. So,
please take it off. But what we might do is I might kind of get you to talk us through, because I've got the philosophy, and if you're new to the My Millennial Money world, you will know that I believe what's good for the geese is good for the gander, and having good people and good companies help us understand is really good. And I just want to throw to Tim, maybe for the next 15 minutes, to talk about AIA itself, and particularly Vitality, because I believe it is probably the most value-packed benefits program in Australia, without a doubt. And so, Tim, can you see that shared screen still?
I can, yep.
Yeah, so AIA Health Insurance, just talk to us a little bit about the history of that.
Yeah, sure. So about 4 years ago, I'm going to say 4 or 5 years ago, so let me go back even further than that. About 7 or 8 years ago, we looked around and we said insurance can be quite transactional, both on the life insurance side and the health insurance side. You're either paying a premium or you're trying to get a claim paid or whatever else it might be. And as a company, we wanted to do more than that. We wanted to help our customers and our members to lead healthier, longer, better lives. So we looked around and we said, who's doing this well globally? And we came across a company called Discovery that launched Vitality in South Africa to start off with, and it expanded all over the world. And we were able to negotiate with them to get exclusive rights to Vitality, bring it to Australia and launch it here. And really, Vitality is a health and wellness program. So it's not a loyalty program. A lot of people think it's a loyalty program. It's not. It's a health and wellbeing program that's designed for you to know your health, to improve your health, and then if you do the right things, to enjoy really exceptional rewards. Now, we brought that into the market. It was very successful on the life insurance side. And then what we developed was a customer value proposition around life, health, and well-being. So how do we help people lead healthy, longer, better lives through our life, health, and well-being offers in the market? So we developed a health insurance business that actually launched 3 years ago. Just over 3 years now. Feels a lot longer, particularly since March. But we launched about 3 years ago, and really we were looking at, for those of you that do know health insurance well, the cover and the products, it's highly regulated. You would have seen that from the slides already. But we wanted to bring vitality and give people real value for money, because that's what we thought people were missing in this category, right? The people that use it love it, but the people that don't necessarily get great value in their eyes out of it. So how do we make sure that everyone was enjoying the category? And that's how we launched AIA Health Insurance. So it really wasn't about, insurance is one part of it, but really the well-being's at the core of it.
Yeah. Now,
thank you.
Oh,
that was a good segue. Well played.
Yeah. Wow. It's shivers. I've gone the wrong way.
No, I think that's right.
Yeah. Oh, these slides are moving. Anyway, so here's some. They're moving slides. I didn't know that. Anyway, talk us through.
It's okay.
Yeah.
So we launched with AIA Vitality. So depending on which product you take, you get up to 2 adult AIA Vitality memberships included in a policy. If it's a family policy or a couple's policy, if it's a single policy, it's obviously one. We actually give you an upfront 5% discount when you join AIA Health Insurance, when you first join, as long as you maintain silver status. Now, I'll talk a little bit about the statuses in a second. We have no gap dental and higher percentage back on dental treatments provided by some of our providers like smile.com.au dentists, and they've got, well over 1,000 dentists all around the country. We launched something that if you're AIA Vitality and Silver or above, and you've been with us for 6 months or more, we'll actually refund your excess if you have to go into hospital. And if you're Silver or above, then you actually get higher benefits back on non-dental ancillary benefits as well. So, and if you, of course, you take life insurance, you then get a deeper discount again on the life side. So really, it's about providing value for money for people. And if you engage in Vitality, and you don't need to be a superstar athlete to achieve these statuses. It's a health and well-being program backed by science. So it's got global experience on that this program works. It helps people live healthier lives, makes sure that they get their checks and screenings done early, gives them a pathway for them to improve their health. So for some people, it might be getting more active. For others, it might be quitting smoking. For others, it might be eating better. We've got mental well-being assessments in the program. And for doing all these things, you get points. So you can't buy the points. It's not like a frequent flyer program. You get them by making healthy choices in your life. And as you build up these healthy choices and points, you achieve statuses. It goes from bronze to silver to gold to platinum. And silver's 10,000 points, gold's 20,000 points, and platinum's 30,000 points. So we really divide the program into 3. And I've got a bit of a slide on what you can get back if you engage all the way. So you can actually, if you get all your assessments done and things like that, you can get from 0 points to having enough to get to silver status in a day or 2.
Oh wow!
So it's not a hard thing to do per se, but it does involve you actually taking an active interest in your well-being. So we offer lots of partners that we give you 50% off nutrition assessments. You can get up to 50% off your gym membership. You get free online assessments. We give you a free health check through your one of those chemists there, Terry White, Amcal or Guardian. We're going to talk a little bit about the Apple Watch benefit in a second, but there's basically these great benefits that you can get just by leading a healthier life, basically.
Yeah, and I know. I was going to say, Tim, I know people who use Vitality and literally they just swear by it. Particularly when Virgin was flying and we were all flying, the amount of money they were saving on airfares and the gym membership.
Well, that's right. So a platinum member on Vitality could get 50% back on their flights overseas. I know people that have saved, hundreds and hundreds of dollars doing that. They absolutely love it. That was when people could obviously fly.
Yeah.
We've also got active rewards, which is if you do your activity goals for the week, you get a $5 voucher that you can use at Woolworths or Uber or iTunes voucher, but you can actually give them to charity as well. We've got Black Dog Institute, Cancer Council, Diabetes Australia and Young Care. And really the purpose behind this is if you're doing all the right things, you actually represent a better risk for the life and health insurer. So we're able to give you better rewards and great things for taking an interest in your health.
So like how many steps a day? Like, is there an amount where they like if you do 5,000 steps a day, you're on your way to gold or whatnot?
Yeah, I think it's 7,500 steps a day for 50 points.
Yep.
And 12,500 steps a day for 100 points. But you can actually achieve them quicker by if you go for a run or a walk or whatever else it might be. Right. You can get points for just doing the online assessments.
Yep.
So there's lots of you get points when you go to the gym. You get 100 points for every gym visit. Your card automatically links. So not only do you get the discount off the gym, but you also get the points. So
can I tie my Apple Watch to my dog's leg?
You can, but you'd be surprised how quickly that wears thin.
Yeah. So talk to us about the Apple Watch campaign that you've got.
Yeah. So with Vitality, but I've got pieces of paper everywhere at the moment, but with Vitality, you can actually contribute your active rewards towards an Apple Watch. I think it's up to Series 5.
Yeah.
So I'm just getting the screen up here. Yeah. So if you achieve all your weekly rewards, for a month, your weekly rewards will go towards an Apple Watch that is basically free. So if you achieve all your activity goals for 2 years, you get a free Apple Watch. Now, people often ask, what happens if I don't do a weekly reward? So if you do zero weekly targets in a month, you'll need to pay $27 in that month towards the Apple Watch. But if you do 3 weekly targets, then you only have to pay $12. And if you do 4 or more, then you pay $0.
Yeah, wow.
So you can get. I think I don't know I don't know off the top of my head what the value of an Apple Watch Series 5 is, but I think it's in the $600 or $700 range.
Yeah. Now there's a small case study, and just for everyone, like I think this is just crazy. How much value this is. Can you talk us through this case study? Because then we will get onto questions and have a good 45 minutes straight just of your questions. But I think it's important to note how good of a deal that Vitality is. Yeah,
so let me take you through this, and there's a lot of words there, so I might actually talk to it if it might be easier to talk through it. So this is Lauren. Lauren's got a Bronze Plus Hospital Everyday 500. She's single. Policy with us, AIA Health Insurance. We've got really catchy names for the products. A lot of it's government design, so we don't have a lot of flexibility before I get too many questions on that. But an example of a health insurance annual premium she might be paying is $1,511. Now, it's a 5%. Yeah, I just got a pop-up. Yes, it does connect with Strava and Garmin and everything else as well. So what Lauren does is she's actually 34 years old. She lives in New South Wales. She's got a single policy. She's a member of Anytime Fitness Gym, and she's got a standard membership, and she's paying $77.78 a month and $119.45 joining fee. She's an ex-smoker. Now, thanks to AIA Health Insurance, she's been able to quit smoking through the free Easy Way Quit Smoking program, and that quit smoking program's worth $625. She's joined a local Anytime Fitness Gym where she receives a 10% discount per month. Lauren has also purchased some Jagged activewear, and she gets 30% discount for her activewear. And she receives a $5 weekly shopping voucher for whatever she chooses to do, and for walking 7,500 steps a day. So she's now got cover in case anything happens or she needs to get to the physio. She's leading a healthier lifestyle, but she's also getting great benefits back. So we've also got something called shopping rewards. So if you move across to the right-hand side, you'll see that she's also, through the Vitality program, she's done the online Vitality health review. She's done the skin self-examination. She's done the online nutrition assessment, the mental wellbeing, non-smoker declaration. She can do that now because she went to Easy Way. She did her dental check, and she had 60 active benefits where she hit her goal for the day. Now, she's, as a result of doing all this stuff, and she's up to 18,500 points. So she got a $20 gift voucher for hitting 10,000 points. She got a $40 gift voucher for hitting 15,000 points. She got $5 weekly active benefits times 30. So that's $150. Her 6-month saving off Anytime Fitness was $46.50. Her 50% saving off the Anytime Fitness joining fee was $59. She saved 100% off the smoking, and she got 20% on a cash back from a return flight between Sydney and Melbourne. Let's call it $300, and she got the jagged savings. So she actually ended up saving close to $1,100.
Yeah, wow!
Just by engaging for the program. So she paid $1,500 for the premium, but she got back $1,100.
Yeah. Yeah, wow. And there's another case study here. We won't go through it in detail, but old mate Steve, he's spent $1,300 a year on his health insurance, and he wasn't a smoker, so he didn't have to pay the $600. But he bought a Garmin watch. He's a gym membership there. He gets some massages, and he's basically netted out. So the health insurance didn't cost him anything for that year.
Correct. Yeah. So the more you engage, the more you get back. And you can't buy the points. You just do it by leading an active and healthy lifestyle, eating well, doing your nutrition assessments, keeping your mental well-being on track, do all the health reviews, and just do 7,500 steps or go for a walk.
Yeah. It's really good. Now,
we've actually seen post-COVID a lot of people, because the gyms have been closed, people haven't been able to take flights and those types of things. But post-COVID, we've actually seen an uptick in people taking more of an interest in their health and doing walks and actually replacing their commute. So a lot of people had a long commute, and they've ended up replacing that with walks. So we've actually seen a big tick up in some of those things post-COVID.
Nice. Very good. Well, thanks for showing us through that. Now, shall we get on to some questions?
Oh, if the first couple are anything to go by, God, they're going to be difficult.
Actually, let's just do another poll because I think this will lead us into some of these questions. So I've just launched the poll. What is most important to you with private health insurance? So just have a read. The first one is contribution. I don't know why I said it like that. Contribution towards extras, dental, optical, physio, etc. Choice of doctor and hospital, etc. Not paying the Medicare levy surcharge and lifetime health cover loading, or all of the above. So just have a bit of a read. There's about 55-60% of people completed. And just, I guess, from my personal point of view, I've first and foremost got private health insurance because if I need, I'll first say, if anyone here has a life-threatening illness and needs to call 000, we go to the hospital, we're looked after. That's part of being Australia. Okay, it's part of being Australian, basically. So that's not the issue. The issue is getting rushed to hospital, and they're saying, "Oh, yeah, we've sorted you out, but you need to go and see a specialist, and you need some surgery." Now, I've got private health insurance because I want to do my life on my terms, and that means if I need, and if you've been a listener of the podcast, I've had 8 ankle operations. I've had bloody cameras up here, down there. I've had my nose fixed. I rely heavily on private health insurance, but more that I can book in a time and date that suits me and just have control over the situation. Now, I'll end the poll and share the results. Yeah, so 38% of people are interested in, the extras, the choice of doctor and hospital, and not paying the Medicare levy surcharge and the government health loading. And Liz actually said she's interested more so in the hospital choice due to being in a rural location. So
yeah,
I guess my personal view, I don't agree with the Barefoot Investors statement that says you should only get top tier hospital and never extras, because he doesn't know every one of his readers' personal situation. So I'm never going to subscribe to telling people they only should do this or only should do that. I know his book and his, and this is just from reading it. I've never met the author, but I believe he's just mainly looking cheapest to get by. And I don't think that's an option because we've all got individual circumstances. So,
Glenn, if I may, can I share? Yeah. Can I just share for me my personal story with private health insurance? So, I took it out like a lot of people do the first time my income ticked over.
Yeah.
So I could avoid the Medicare levy surcharge. That's actually not necessarily the only reason. A lot of people under that threshold take out private health insurance for all the reasons you outlined. But when I took it out, I went, well, what's the best policy I can buy that equals that Medicare levy surcharge, right? Really transactional relationship with it. Got married, thought about kids, did a review, ended up in a really high hospital so I could have pregnancy cover because we wanted to go private system. We've now got 3 beautiful kids that are absolutely ruling the roost at our house. But and post that, we did another review and we've now dropped down because we don't plan on adding to the family. But it is a product that, you know, there is no one rule for everybody. Now, for me, as I've gotten older, well, you know, I still play football on a weekend. So actually extras has actually become really important to me as well, right? Because as you know, the older you get, the mind's willing, but the body's not. You get a knock, you get whatever it takes. And so you do need a bit of physio and, you know, dental's really important to me because I need the kids to, some of them need braces. So, you know, your life circumstances change sometimes and private health insurance, thankfully, the way the industry is designed, you can actually flex up and down as you need to across those products. So I tend to agree with you that I'm sure it's good advice from a cost perspective to but really, if you engage with the category, it's a really important partner as your life stage changes, right?
Yeah.
Certainly from a peace of mind perspective.
Now, just because I do want to answer the question from Anonymous about the benefits of private cover for pregnancy, but I kind of want to ask a personal question about my own situation to you, Tim.
Oh, yeah, fire away.
Yeah, and I think it will resonate with some.
It's not a financial services product, so thank God I'm not in
advice territory. That's right. So my current health insurance provider, who I've been with for a million years, and, you know, I do and will be reviewing my cover.
Were they your parents' cover, interestingly?
Well, interesting. My parents didn't have private health.
Right.
Because we were just working class, suburbia, under thresholds. And thankfully, we didn't have any medical events growing up, but we were all private all the way. But the policy that I've got, and I'll make a number up for the example.
Yep.
There was a $150 benefit a year for a tooth clean, right, on the extras. My current provider, if I go to the dentist and the bill was $100, so I've got the $150 benefit and the $100 dental bill, my provider go, that's cute, for this visit we're only paying $35 or whatever. They're not going, there's your whole allocation. So how does AIA Health Insurance work in relation to extras in that situation?
So just in your current circumstance, that sounds to me like you've got an extras policy that has sublimits on it. And what I mean by that is, yes, you've got $150 to use for that
for the year,
clean or whatever. We're just making it all up. Yep. But each visit, there'll be a maximum of 35 or 25 or whatever the amount is, right?
Yep.
Our extras policies are percentage cash back. We still have limits. You can't get a tooth cleaned and have, you know, a charge of $6,000. That's probably a little bit excessive, but we basically have, and it ranges from about 50% back to 70% back, and the price increases as you go.
Right.
So in that example, if the limit was 150, so you'd get 70% up. We should have picked an easier number. So you get $105
$100
back.
Yeah.
$105 back for that first visit, and then you'd have $45 left over for your next visit.
Yeah. And I guess just to reiterate that, like, I primarily did private health insurance for myself for the hospital cover, but the benefits are there. So I go to the dentist twice a year because I've had braces and I get a clean. I might need the odd bit of physio or get some spectacles. So I do use it, but the driving force wasn't for the extras cover, but I do enjoy them. Now,
so it's a very typical story with a lot of people, right? They take it out for the tax reason or hospital or pregnancy or whatever else it might be. And then, it just, your needs change over time.
Totally. Now, can you explain some of the benefits of taking out private cover for pregnancy?
Oh, so you get to choose your own hospital room, choose your own doctor. Essentially it gives you, if you're in the public system, you might have to share a room. You don't get to choose your own doctor, et cetera, et cetera. So it's really about comfort. It's probably not the. I'm not selling it, right? But it really is. As someone who went through it, you go and visit the facilities. You've got your doctor's going to be there, and they're going to charge. So it's really. And I know my wife had her own room, and so it depends on the experience. I mean, it's a very personal, deeply personal thing for couples, right?
Totally.
So some people, it just depends on the experience you want. Is essentially what it boils down to. We went with a private hospital attached to a public hospital.
Yep.
And the reason we did that was, one, we loved the hospital itself, but our doctor, the doctors and the anaesthetists and all those people worked at that private hospital. But also in the case of an emergency, then you've got all the public facilities there that you can leverage if required as well.
I think it's important to note for some people who are looking at the hospital cover or the pregnancy cover. I mean, do what you want. I'm just a guy with an opinion. But if there's actually an emergency, they've got to call an ambulance anyway and take you to the public hospital. Like, that's the risk. And I've talked with doctors who say they will only have their baby in public hospitals because pregnancy is such a high risk game. So take that for what it's worth. But I'm not sure if.
Well, it depends whether you're doing natural birth, whether you're doing, there's a lot of deeply personal decisions that get made between couples.
I don't know.
Some people have elective Caesars, and that's, so it really is a deeply personal choice for people.
Yeah.
So you can't really say it's a blanket one size fits all.
Totally. Let's have a look here. I don't know the answer to this one, and if you don't know it, we'll get back to people.
They haven't been easy questions so far. God, you got a very learned audience. Let me tell you.
Yeah, they're smarter than me.
Is anyone looking for jobs?
Yeah,
I could do with some people like this.
Yeah, I have a partner, but we are not married or live in the same house. Are we eligible for couples cover? If so, are there any benefits from this? I would probably say no, because you're not de facto. Is that a fair statement?
I think you explain the circumstances again to me.
A partner but not married. Oh, actually, you can actually read it. Can you pull up the question and answer little box?
Let me hopefully I don't stuff it up. I have a partner, but we are not married or live in the same home. Are we eligible for couples? No, I think we will confirm that, but I think you need to be living at the same address, or you need to be in a de facto type of arrangement.
That's what I would suspect. There's another question here from Anonymous. Would you choose hospital only cover or extras only cover? Pros or cons? Well, if you choose extras only, you're not getting around the Medicare levy surcharge if you're over the threshold.
Correct. So the extras doesn't count towards your Medicare levy surcharge. I know it seems like a bit of a cop out for your listeners, right? But it really does depend on your circumstances. If you had asked 21-year-old me, do I need extras? The answer would have been no.
Yeah.
If you ask 42-year-old me, absolutely.
Yeah. I feel you. And I think, I don't want to diss anyone in the private health industry, but I'm certainly not letting extras be the driver for me taking out private health insurance.
That's I think that's sensible.
Yeah. So that's good.
Because ultimately you've got to remember it's still insurance, right? So if you dental, cleaning, optical, I get all that sort of stuff. But if you're going to the physio, you've got something hurt. If you're going to the chiro, you've got something that you're trying to get fixed. Hopefully you're never in that situation. And if you're doing the right things, then you get some value back through Vitality as well.
Totally. Question: why is private health insurance so bloody expensive?
Oh, good question. Now, you'd be surprised to know we get this question quite a bit. So, look, really, it goes up every year because medical expenses are growing at a rapid rate. Is simply the cost. So, I'm going to be completely transparent with your listeners. If you have if we collect $1 of premium, we would be returning in claims anywhere depending on the year, right, and the circumstances and all that sort of stuff, but anywhere between 85 cents and 95 cents in the dollar in claims back to members.
Wow.
So it's not like there's this massive profit pool and profit margin that you're running to. So the whole thing gets driven by the claims cost, essentially, what you're paying for hospital, what you're paying for doctors, what you're paying in extras. Now, over time, it's such a highly regulated industry. You'll know. Not that anyone ever does this, but if you went back and compared what it costs to get a procedure done 10 years ago or 7 years ago versus now, it's more than doubled. You're getting 6-7% year-on-year growth, 5% year-on-year growth in procedures and doctors' charges. So it's not. So if you think about it, 85 to 90 cents in the dollar is going back. That's the 10 cents is what we can control, and the 90 cents we can't. We pay the claim, right?
Yeah.
And so that's what's driving the rate increases. Now, why is it so expensive? Because if you get 10 years of growth like that, then it's 50% more than you were paying 10 years ago, right? And that's really what's driving it. So what they're trying to do, the industry is trying to come up with ways to make it more affordable moving forward. One of the steps the government's done is introduce a discount for young members. So if you're under 30 and you take out youth cover, you can get up to a 10% discount. They've standardized some of the product labels, like you'll see everyone's got a bronze, silver, gold hospital product.
Yep.
So it makes it easier to compare. But ultimately, they're also trying to, so some of the prostheses, some of the things used in surgery, whether they be, joints or whatever else it might be, they're trying to do a reform of that at the moment as well. Some of those are international prostheses companies that actually end up, compared to global markets, we pay a lot more for here. So there's all this stuff in the system that ends up driving costs up. And it ends up driving it up for Medicare, the public system. It ends up driving it up for the private health insurer, and the more it drives it up, the more there's an out of pocket for the member.
Totally. And just on the out of pocket, like I'll use again my situation because I know it as a reference. So my last 3-4 ankle surgeries, I went to a ankle specialist in Sydney. Now he only works privately. So if you Google best ankle surgeon or top ankle surgeons Australia or in Sydney, he's one of the 3. Yeah.
Glenn, can I ask you a question? I know this is not related to the podcast.
Yeah.
Why have you had so many ankle surgeries?
Oh, just one thing after another, unrelated. Like it was originally.
I was going to say you're a footy player, mate.
No, it was originally a school injury.
Right, never healed properly.
I had a bung. The first surgeon was a dickhead. And didn't do it right and wrecked the first 3 surgeries. And
wow.
I had 2 other surgeries. Then I had a bone tumor just randomly grow in there. Like it's just been one thing after the other.
Bloody hell.
But I went to my doctor. The doctor that I was used, you can't get in the public system. He's only private. So if you want the best, you either pay for it out of your own money or you've got private health insurance. It's as simple as that. And then, the private hospital, I looked at the private health insurance bill basically, and they were charging $5,000 a night for North Shore Private. Right. Yeah. So
and so it's not going in. People think, it's no value. I'm not getting anything back. But once you look at the itemized bill, between Medicare and the health insurer, they're actually paying quite a bit. The issue is the charges that are there. So if you want me to expand a little bit on how the gap works, that might be helpful for people for some context.
Talk about the gap,
Yeah. So what happens is the federal government sets a schedule of fees for eligible services provided by doctors and inpatients. So you've got to be in the hospital. Now, those fees determined by the federal government, Medicare pays 75% of these fees, and the health funds like AIA Health pays the remaining 25%. But doctors and providers are not restricted to charging this fee and are able to set their own fees, which, it might be complicated, might not be, whatever it might be. So, and those fees can sometimes be, and often are, higher than the scheduled fees. So if your doctor charges a higher fee, then there will be a gap between what they've charged, and what between us and Medicare, what we can pay based on those eligible services. Now, what we do, and that's what a gap is, yeah. So now it can sometimes leave you with out-of-pocket expenses. Now, what most of the private health insurers do, and AIA Health Insurance does, you then go and negotiate with the hospitals and doctors and all this sort of stuff. So we've got AIA Health's access gap cover. So we'll pay more than the 25% of the schedule fee with those select doctors and hospitals that have agreed to a set fee with us, so that your out-of-pockets are significantly reduced or reduced to nil. Now, often you'll hear health insurers say, well, you should ask for a second opinion or shop around and do all those sorts of things. But I fully acknowledge when you're sitting across from a doctor and he says you need to get, or she says you need to get this done, it's probably not the right time to be shopping around. So the information vacuum can sometimes be different as well. But if you're with AIA Health Insurance, then thank you for your premium and we love you. But even if you're not, you can actually ring your health fund and get a bit of a steer on this stuff as well.
Yeah, and just on that, do you think the first port of call when reviewing your cover is to call your current provider and have a chat with them? Or there's a question with Anthony that says, why would I not simply use the government private health insurance website, privatehealth.gov.au, to decide what policy is best for him?
So I would say to Anthony's spot on. So this is where your members are, but it is complex. That website's not easy to navigate. It's hard to pull up the PDFs and compare it against fact sheets and all that sort of stuff. But if you're that way inclined, you've got a good understanding of the category, then that's absolutely right. All this information is publicly available. There are aggregators out there, but they get a commission for selling products. They don't have the whole panel either. And your existing health fund might be a good port of call as your first call. But as with anything, the great thing about, and your podcast caters for this segment, right? Like my brother is a millennial, and you guys don't need as much help as my generation and the older generation did. You've grown up with everything being at the touch of your fingertips, so you can, your confidence levels in being able to take that on yourself and just go up and go, hey, I'm going to do the research myself and make a call is a lot higher. And if you feel confident enough to do that, then you should do that. If you want a second opinion, you can ring your own health fund. You can ring the aggregators. Choice has got stuff. They're not very happy with the private health insurers at the moment, but there's a lot of information out there.
Yeah. What does AIA do with the information from the assessments required to go up the status levels? So are you selling the info to China? Or?
Oh yeah, no. We don't sell the information. We don't actually. So it's not relevant for the health insurance side, but because there's no underwriting in health insurance, it's guaranteed acceptance, it's community rated, everyone pays the same rate depending on their circumstances. So it's less relevant for health insurance, frankly. But that information, there's only so much you can do with it given but on the life insurance side where you do underwriting, you do an individual assessment on someone's medical and financial circumstances. We've made a decision very early on that we don't use that information unless the member chooses to use it to support their own position. Sure.
Now, and there's a question here from Jessica. Does AIA use the data you give them in surveys and health checks to judge your risk and therefore affect the premium or cover or something like that? So if someone did a health thing throughout the year with Vitality and they said, oh, you've now got diabetes, can AIA turn around and say, hey, we're increasing your private health insurance premium?
No.
Okay.
No, it's community rated, and we can't do that. So
on that, how do pre-existing conditions work? So let's use me as an example. I've had 1 million ankle surgeries. I want to change to AIA Health Insurance. And I probably will after tonight anyway. How do I, am I covered with you guys, or what do I do?
So, okay. A pre-existing condition is a condition assessed by one of our medical practitioners that you've had or shown symptoms within the past 6 months before you joined us or changed your cover. So you don't need to declare this, but if you claim, then you've usually got a waiting period against those pre-existing conditions, again, to stop people from just claiming and running, right? Yeah. So it can range up to 12 months depending on what the pre-existing condition
Right. Okay.
is.
So that would mean I've got to basically, before I switch, just chat with AIA and say, hey, I've got sleep apnea, I've got bloody mate.
Yeah. You don't have to declare it. You don't have to declare it because you don't know what you're going to claim for. But
just to get an idea about.
Correct. So that's what I would say. I would say ring the provider up. Our people, we get great. And now we'll get the one customer, but generally speaking, we get really good customer feedback. We help people through. It's not I can't speak for the other funds, but ours is not a hard sell. So what I mean by that is if you ring us and we think your best position is to stay where you are, we say stay where you are.
Sure. Yeah. So, okay. So just on the waiting periods, that from what you're saying is it's slightly different for pre-existing conditions as opposed to I'm signing up tomorrow and then I fell over and broke my leg, but because I already have private health insurance, I can fall over and break my leg without any issues. Is that what we're saying?
Yeah. So if you've already served a dental waiting period or an optical waiting period, something like that, you come across those waiting periods are standardized across the industry. You don't have to serve them again. If you've got chronic ankle injuries, you can still claim on it, but there'll be a period of time depending on the condition that you won't be able to claim on it under the new policy.
No worries. I know with my own current policy, and again, I'm just doing these webinars so I can learn, my hospital excess, it is once per calendar year. So what I generally do is if I've got to have an operation, I'll generally book it, if it's elective like an ankle, at the start of the year. So then at the end of the year, if I do have to go back to hospital or if I've got a endoscopy booked or something like that, I don't have to pay the excess again. How does it work with AIA Health Insurance?
We run 1st of January to 31st of December as well. But if you're silver status or above on Vitality, we actually refund the excess back to you.
Right. Okay. So it's
So it's if you're silver status or above, then you don't need to worry about it.
Yeah. Wow. Better get moving.
But no. Well, it's just you got to remember, right? So think about it in the context of 85, 90 cents. People is what we're returning, and you've got really healthy people in that cohort, and you've got really unhealthy people in that cohort, right? Some people that unfortunately have chronic conditions, and others that are leading really healthy lifestyles. So if we can get people not just doing things a bit better, a bit more active, eating better, looking after themselves, doing the right things, drinking a little bit less, doing all that sort of stuff, then overall over a period of time, then that should help the health insurer manage their costs. And we need to be able to return some of that to people and say, hey, keep going. Here's some great rewards.
Just a question, everybody. Just raise your hand if you're finding this interesting, because I'm finding it interesting. Just give us a show of hands. Yeah, there's hands going up. So you live to survive another day, Tim.
Oh no.
So
I've got hundreds of family members on, mate. That's what.
Now, let's also. Do you want? Whoops. I'm gonna just to spice things up before we get back into some more questions. I'm going to share my screen again, and I want you to now tell us what you're doing for My Millennial Money listeners. So talk us through this bad boy.
Okay. So listeners of the My Millennial Money podcast and my legal team have been very specific around what I
know. I got this at bloody 7:15. What are you doing to me?
Yeah. Sorry, buddy. Sorry about that.
That's all right.
So listeners of My Millennial Money podcast can receive an e-gift card for Woolworths, Uber Eats, iTunes, the App Store, or Google if they join AIA Health Insurance. It can be up to the value of $400 if it's a couple or family policy, or up to $200 if it's a single. You need to call AIA Health Insurance on 1-800-333-004. So I'll repeat that again, 1-800-333-004, and use the code MYMILLENNIAL. It expires on the 6th of September, so you've got a little while. I think you've got a couple of weeks. Yeah.
Oh, so just on that, Tim, I've just put a link in the chat. There's a web.
Okay, great.
Your team set up for us this afternoon. That's probably
fantastic.
So if you want to make a note, if you fill out the form that's in the chat, if you do review and you feel that AIA Health Insurance is something to get excited about. There's a couple $100 there, which will be wonderful. So I might email that link to everyone as well tomorrow. So thanks so much for that.
So that's on top of Vitality. So yeah, we want to pull together something
about Vitality. So can I just call up and say I want to be a Vitality member and just pay?
No, you've got to take it out with a life or a health insurance policy.
Sure.
Yeah.
Okay.
So you can take the health insurance without it.
Yeah.
But we find very few. It's our value proposition, right? It's one of the main reasons why you join us. There's no. Yeah.
And straight up, it is. I've been around the world a little bit with all this stuff, and it is the best value program I've seen in Australia by far. There's a link in the chat. Caitlin,
you used to be able to get anywhere from $3,000 to $5,000 back. But that was when planes were flying, et cetera, et cetera. So it's a bit harder now to get that, but hopefully we'll be back living a normal life soon.
Totally. Caitlin asks, what's the best time of year to review cover?
Oh, so what you'll get sometimes, and ASIC's clamped down on this. It used to get advertising at the end of financial year with people saying, get in now for your tax. It doesn't quite work that way. You actually need to hold the policy for the whole year for it to affect you. So not for the one day on the 30th of June. So ASIC clamped down on a lot of people advertising that. So my suggestion would be rates go up in April, 1st of April, around that date every year.
Yep.
You'll get a notice at some point in March. That's usually a good time to review. You don't have to wait for that, though, if your circumstances change or something's happened. We have people who go, man, I saw my cousin, something happened, and you get all sorts of reasons why people review. There's no best time. You don't get penalised for joining earlier or later. You'll have some people are rolling off their parents' policy that expires at a certain date when they turn a certain age, so that might be a good time to review it. But don't feel like there's one date where all the offers are in the market and that's your only time to move. There might be advertising where an offer catches your mind, right? It catches your eye. So there's all that sort of stuff.
Yep. Question here from Anonymous. Which health funds are best for different locations in Australia? I.e., they've heard that Bupa is best value and has the most benefits in Queensland. Is this, do you think in your experience that has any type of substance to it?
Not in broad terms like that. Not for whole states. I think what you'll find is there'll be some help. Look, and I like a lot of my peers and my I think we're trying to do good work here, right? Yeah. So we're not trying to do the wrong thing by our members. Doesn't mean we get it right all the time, like anyone else, but we are trying to do the right thing. So particularly in rural areas, you'll get funds that are specialised. They might own the hospital. They might, so in that circumstances, which fund you go with is quite important. But the rest of the time, if you're in a metropolitan area or Rockhampton or Townsville or generally speaking, Wollongong, Geelong, those types of things, usually most of the health funds have contracts with almost all the hospitals.
Yeah, and I mean, if you live in a 2-horse town and there's a bloody Bupa dental clinic there, well, maybe
that's right. That's exactly right.
It's better for you because of whatever reason. So yeah.
Correct. Now the actual good. A lot of those branded clinics like Bupa and HCF and all those other ones, they'll actually still accept your health card from another.
Yeah. Is that because they're a privately owned clinic and they franchise the name out?
I don't know.
Okay.
I don't know the answer to that. I think it varies. I think it varies. I think some of them own them and hire their own dentists and optometrists and etc. And I think some of them might franchise it out.
Yep. And me personally, I go to my Lakes family dentist down the road in the suburb I grew up in, and they just swipe my card. Like, it's
right.
Just do it anyway. There's an interesting question here from Frankie. As an almost 25-year-old needing to choose my own private health provider for the first time, how do I go about choosing what insurer is best for me? It is challenging to find the info that I can directly compare providers.
Yeah, that government website's really hard. So I'd start there. There is a lot of information on the government website. What you'll find with a lot of the online comparators is you'll have to enter your details, and they'll try and call you back.
Call you 50 times. Oh my goodness.
Yeah. So
and they'll sell you. They'll try and bloody sell you.
Yeah. So there's that. But I'd also I would ring around, right? And you know what? Actually, give us a call. We'll help you work through your needs and stuff like that. Like I said, we don't do a hard sell, which it's one thing why values wise it's fantastic. So we'll just, we've got a lot of experience. We can talk you through what's important to you and what's not. It doesn't mean you have to buy it from us, but
yeah. As a broad brushstroke, and this is kind of what I've resolved, and I have not reviewed my cover for 15 years. Okay. I've kind of resolved that it's probably all the same price wherever you go, but you've just got to look what's most important to you, whether you need to go to the dentist twice a year, or I really think the soft things like Vitality are where I'll get my value from.
I think that's right. I think a lot of the products. Look, I'm not gonna. There's cheaper products, there's more expensive products, but generally speaking, like for like comparisons, there's $10 a month, $15 a month difference. Yeah. It's not $60 or $100 a month difference.
Yeah.
So really, what your needs are and what you're going to use it for is really important.
Yeah.
As a 25-year-old, like if Frank, I think it was Frankie. If Frankie's playing sports. Maybe, mate, I don't know. I didn't get injured that much when I was 25. I get a lot more injured now when I'm 42. But you got to start thinking about what am I doing?
I mean, Frankie, like, I don't get anything for telling you this, but like, if you joined AIA, grab the $200, use Vitality for a year, and if you don't get value and it sucks, get the hell out of there. Sorry, Tim. But it's a value.
Glad we rehearsed this.
Yeah, that's right. It's a value play, isn't it? If you're not getting value for wherever you put your money,
don't think you're going to use it, elsewhere. If you don't think you're going to use it, like as a response to COVID, we're the only fund that launched for extras. If you don't use your extras, we're giving some cash back to people next year.
Yeah, wow.
To give them again value, right? We're trying to deliver value because we know that the poor Victorians. Our thoughts and prayers are with you. Our head office is in Victoria, so we know exactly what's going on down there. That they dentists are closed, optometrists are closed. They're not going to get the value potentially that they and when they do go, there's going to be a backlog and all that sort of stuff to try and get in. So if you're not using it, that's why we came up with Extras Value Protector so that we give some people back some money. It's tough times.
What's the approximate cost ranges for the different level of hospital and health covers a month? So.
It can range from $90, $100 a month to depending $400 a month, right? Depending on if you want the bells and whistles and everything, and
as well if you want a lower excess, it's obviously
correct. Yep.
There's a question here. How does it work with out-of-pocket costs for elective surgeries? Am I going to be left with a large bill for getting a surgery? It is very hard to find information when taking out a policy. So,
it's not the policy that determines your out of pocket; it's what the doctor's charging.
Yeah. So my surgeon.
That's why it's hard to find information on the policy. There's government scheduled fees. Medicare pays 75%. We pay 25%. We pay more than 25% if it's doctors we've got arrangements with, but that doesn't. The doctor can still charge what they like. It's the doctor that actually determines, and the hospital that determines what the out of pocket is.
Yeah, my ankle surgery, the doctor charged a $3,000 out of pocket. But when I had the camera down my throat, that doctor didn't charge any out of pocket. So
right, there you go. And you're meant to get a quote. They're meant to give you a sheet that shows you that gives you all the costs, and you can actually take that to your health insurer and go, how much am I going to get back? And you can actually cross-reference it against the health insurer's list. So if they're meant to be a doctor that's on our access gap cover, then you can ask them. You go, you're meant to be on this access gap cover. Why are you charging me? Yeah, that's probably not. That can be an awkward conversation, but it's not the health fund. It's a big misnomer, right? That's saying the health. Yeah. We're not the ones driving the out of pocket.
Yeah, and it's a capitalist society. My ankle surgeon, probably the best in Sydney. He can charge what he wants. If you want to use him,
mate, can I say we see that? We see same surgeries in two different geographic regions. One's got a massive out of pocket, the other one doesn't.
Yeah,
it's not right, but it is. Unfortunately, it is what happens sometimes.
Well, and it is supply and demand. Like if he didn't get any customers, he'd probably lower his price. There's another question here, and we'll just do it once more. Guys, please clarify, if we just want to avoid the bloody Medicare surcharge, what is the minimum cover we have to get?
You've got to get a hospital cover that's not accident only.
Yeah, and has an excess of
$750 if you're a single.
Less. Yeah.
Or $1,500 or less if you're a family.
Yeah. Yeah. Well, there's a lot of questions that have kind of repeated. I'm just going through. Did you want to add anything else, Tim?
No, it's been the questions have been fantastic. I've got to be honest with you. They've been really, really good. Very detailed as well, which is fantastic.
Yeah.
So I think there's 37 funds in the market.
Really?
So it's quite a lot. Yeah, there's quite a lot.
Yeah.
A lot of them are not open. They're restricted funds. So what that means is you'll get funds for just teachers, funds for just doctors, funds just for a specific geographic region, et cetera, et cetera. We're an open fund. We take membership from anywhere in Australia.
Yep.
So there is quite a lot of choice in this category, and no one does a good job of comparing all 37 funds at once.
Well, it's actually impossible.
It's like the old financial advisor. They can't possibly know every variant of every product that's ever been released, right?
No. And every hospital cover fund comes with ambulance cover.
Yes.
Yep. Now, I want to just...
I just gave a blanket statement. I can't speak for policies that are 20 or 30 years old, but generally...
Yeah, sure. A question to everyone. In the webinar chat, I've put a link to a review of tonight's webinar. We value your feedback, and we're trying to get this right. Can't win them all, but we're going to do our best to make these webinars the best that we can. Now, Tim, I'm going to share one last slide for people. They got an error.
This is not a stitch up, is it?
Oh, it might be.
Great.
Just someone said they got an error when they opened up the survey. Ooh, yeah. That's an issue. Just let me... why isn't that working? Because I've put together a matrix for people, and I'll share it in the Facebook group tomorrow.
Is this the workflow?
Yeah.
If you're 30, if you're not.
Yeah.
I thought it was quite good.
Yeah. So my designer, the survey, it works. I think Typeform's just down. I'm just going to share this slide again, everyone. And tomorrow in the Facebook group, we will put it up. Jess, the designer in the My Millennial Money team, she's actually made this look a bit prettier. So if you can bear with us, and if you do need to go now, drop off. It's just loading the background because I'm using bloody Keynote through my web browser, which is a pain in the ass. So yeah, if you do have to jump off, thanks for watching, and certainly we'll send you out some stuff tomorrow. Why isn't this bloody... It's just can't win. Nothing works when you want it to.
Oh, mate.
Oh, and a reminder.
Story of my life.
Oh, a reminder, if you want to watch the replay of this, it will be on YouTube tomorrow, and also it will be on the podcast My Millennial Replays. Okay, so you can watch that. Okay, here we go.
My kids, they're gonna love it. That's the only thing they're gonna be proud of, is that I'm gonna be on YouTube.
Totally. So here's a matrix that I made. And again, it's worth what you pay for it, everyone. So if you're under 30, let's just go. If you're under 30, yes, I earn under the threshold. I earn over the threshold. Yes, you need to consider private health insurance. Maybe it's just worth taking a photo of that screen, everyone, if you want to look tonight. But it just is a bit of a guide to basically say, if you're over 30 and you earn over the threshold, you must consider private health insurance for your own benefit. If you're under 30 and under the income threshold, you would have it if you want options in relation to your health treatment or if you have ongoing concerns. And for me, when I was 25, I was the one who said, yes, I want it because I've got ongoing health issues and I want options in my life. So that's a bit of a matrix there, and you can follow that. And again, we'll put a better one up in the Facebook group tomorrow, just so you can download it or whatnot. So I'll stop sharing. Well, it's about 9 o'clock. I think we might leave it there.
Thank you so much. And thanks to your listeners for all their great questions. Can I just give one shout out though?
Totally.
Amy Griggs, now that I've learned how to use the Q&A, Amy Griggs said, I like that the AIA error page cartoon looks like Tim. Oh. Thank you, Amy. That is an excellent sledge to end off on.
How funny. And where's the chat? So again, there's the Typeform link I'm putting in the chat, and I'll put in the link one more time. If you were interested in reviewing your insurance and you wanted to give AIA a good shake, there's a couple $100 as a bonus coming to you. But again, I really want to thank you, Tim, for your time tonight. And I learned a lot. And yeah, give AIA a call. They won't sell you too much. And there's a few thank yous coming into the chat. And just raise your hand if you got a lot out of it tonight. Yep. Hands raised.
Thanks for having me.
Yeah. And we want to do more with AIA Health Insurance because it is a question that keeps popping up. And it's just one of those things, like, you just need it in your life. Pay for it, get on with your life. And when you need it most, it will be there. So there you go. All right. Thanks, Tim. Thanks, everyone. Time flies when you're having fun. Thanks, AIA, for leaving the lights on while you work back tonight, Tim.
Yeah, well, that's right. On my way home now, so yeah. All good. Thanks for having me, Glenn.
No worries. Thanks, guys, and we'll see you all soon. Good night, everyone. Bye.
Take care. Bye.